How's it going, traders? Pup of Wall Street back with my market review. Today we're going to look at the main indices as well as some sector ETFs. If you get a chance, please hit the like and subscribe button below so you can get these actionable market updates as they come out. And if you can, leave a comment down below. Let me know what your thoughts are on the overall market. And if you feel if I'm talking too slow, feel free to watch these videos at 1.5. And keep in mind, I'm not a financial advisor. This is not financial advice. I'm merely doing these videos for entertainment purposes only. So let's dig into this market review. All right, so we're looking at the S&P 500 here. This is my live chart using TrendSpider, and you could see very clear ABC decline, ABC counter trend rally, 1, 2, 3, 4, 5 wave move down in our wave C. So that's leading me to believe that we may have seen a bottom. I don't know if this is the bottom, but I will trade this accordingly. We have some gaps up above. I can put on my GapSnake here on TrendSpider. It's not really showing a little gap up here, but there's definitely a gap here as well. So yeah, I think what we should be watching for this week is 405, right at the top of my yellow zone. If we see a move through 405 next week, we can see a nice 5-point rally up to about 410.64. That was our initial ABC wave down low. That was the low of that wave, right, on this candle here on February 24th. That, for me, is going to be a very big level. I think if we can break through that level, then we could see a bigger rally to the upside. But we want to take this market one step at a time. And let's see if indeed this is a 5-wave decline that has finished, and see if we can start to get an impulsive wave move higher. But overall, I really liked this level down here for a number of reasons. But really, we came into that COVID low anchored VWAP. And if I zoom out, you can see that anchored VWAP is anchored to the COVID low candle. And when you do that, it gives you a sense of where price was headed. I mean, I think most traders that, use the anchored VWAP indicator, we all knew where we were going. It was just a matter of when did we get there? And it looks like we got there on Thursday. So again, it doesn't mean the bottom is in, but it does mean that a bottom might be in. Again, not maybe the bottom. So we do have some noise up above that we do need to watch out for. We do have a declining 50 simple moving average in blue. We have a declining 200 simple moving average, or flat to declining 200 simple moving average. I would just throw on the 21. That would probably be really what I'd be watching. You see this declining 21 moving average. This is your black line. That's right now at 415. It's going to continue to decline into next week. Maybe by the end of the week, it might be downwards of about 410. So that just leads me to believe that we can see a rally up to that 21 moving average. And you'll look here. Once we broke below the 21 here, you could see we tried to break through and got rejected here. We tried to retest it here and got rejected again. So again, this is what leads me to believe that that's where we're headed. We're headed to that 21 moving average. And I think that's going to be a critical level to watch whenever we do backtest to that, to see if we get a further breakout or if we get another rejection off of it. And I would actively look to short the market if we see weakness into that 21 moving average. All right, so that's SPY. Oh, just before I go onto the next chart, you could see that we have, a move very close to oversold conditions, but not quite oversold conditions. You could see on this decline here, we got oversold. And then this lower decline here, we were not quite oversold. And so you had price making a lower low, but RSI making a higher low, which signaled a move higher. That's exactly what we saw. We were not seeing that quite here. I mean, it's slight, right? So you're seeing a low here and a lower low here on price, and you're seeing a low on RSI and a slightly lower one, right? So it's not as present there's no divergence, I should say. I was going to say it's not as present as here. This here is showing clear divergence. This here is not showing divergence just yet. So that leads me to believe that this might be just a counter trend rally, being the trend being down, and this is being a move up counter to our overall trend. So just got to be careful. Again, we might be able to trade this up to the 21, but if we do, just be very careful into the 21. And again, we're on the daily chart here. So let's take a look at the Qs. Very similar story here. Let me get this properly moved. So in this respect, I'm going to just zoom out. I'll anchor to my COVID low again, but this one already had lost the COVID low. So we have to go back a little further to our 2018 lows to see where anchored VWAP brings us. And that's pretty much where we found ourselves this week. Right basically down to my second target. So for those of you who follow me, who are not members of my group, I've been calling out these target zones here for a couple of weeks. Again, ABC, ABC, 1, 2, 3, 4, 5. Very clear 5-wave move down, very clear ABC retracement from our all-time highs. So in this one, we broke below the COVID low. So naturally, tech looked much weaker relative to SPY and the rest of the market. So that's why I use this 2018 this 2018 anchored VWAP low as my next potential target to the downside. This also somewhat coincide with our 1618 extension off of our wave B. So usually take the extension off that. 1272 is my first target. And then second target's always going to be that 1618. The problem with this is that we gapped below the actual target and then failed to break back above it, which sent us really quickly back down to the next target, which is that 1618. So again, might be our wave 5 bottom. It might be. It may not be. But for now, very similar to SPY. Let's zoom in here. Take a look at that declining 21 moving average, right? So we lost it right here. Tried to recapture it here, got rejected. Tried to recapture it here, got rejected. So what are we going to do? We're going to wait for another test on that. Now, we're pretty close to back testing the 1272 extension to the downside at 303.19. I think that's our first level we have to watch. I think the next one will be a gap close up to about 309.71, and then over that up to 317.90. It's certainly going to be a level in between here. But I think first things first, 303, 309.71. I think we watch those levels first. And then if we want to get bullish, we've got to get over that 21 moving average. And I'd like to see a multi-day close over it, to be honest with you. Another one where we're still seeing lower lows on RSI, lower lows on price. The divergence was pretty evident here, very similar to how SPY was. So you had a lower low on price, another lower low on price. You had a low on RSI, and you had a higher low, right, and another higher low. So that showed us that we were having potential for divergence. You could have looked also at the trend line breakout right here. That sent us higher. Look at how we back tested that trend line. That's declined from the highs in earlier this year in January. We gapped below, or we came below it. Now we gapped back above it. So that's why I like using trend lines. I like using Elliott Wave. I like using Fibonacci. I like using anchored VWAP. These indicators do help guide me, but honestly, price action is really first and foremost. Only price pays, as Brian Shannon likes to say. So that's what I'm looking at here on the Qs. Watch for a counter trend rally back up to the 21 moving average. 21 moving average is going to be the bellwether to say, do we break higher or do we get rejected and revisit the lows? IWM, completely different story. Very, very weak here. Lost the COVID lows, came down to the prior resistance where we gapped up. I do believe we'll fill this gap at some point. So, small caps just looking relatively weak to the SPY and Qs. And let's look at some sectors here. Energy, not too bad. ExxonMobil, Chevron, ConocoPhillips, beautiful cup and handle breakout. Nice measured move right up to a flat top at our 300% extension off of this swing high right here to swing low. So very, very strong move. And I think energy can continue if we get that nice break over 81.52. You can continue to look at oil and gas names. This is looking still fairly strong. Utilities, not great, but not bad, right? We're back to the prior highs in March of 20, which showed as resistance until we finally broke out. But as quickly as we moved up is as quickly as we moved back down. So keeping a close eye on utilities, see if we could hold the 71.71 level. Next up is XLP. This is our consumer staples ETF. And you could see we had a nice break over here. We had a back test. We came right back down to that 200 simple moving average. We bounced right back higher. This one has been moving, pretty good here. Back testing now that 1618 extension from this prior high to this prior low. And watch to see 75.62 on consumer staples to hold. If it does, you could see we're potentially forming a bit of a flag here. So if we draw that out, I would watch for, continuation off of this flag. You can see we had a little bit of a peekaboo candle here on Friday. So watch for continuation through that 21 simple moving average. I would say over 77, maybe 77.38 or so, 77.35, 33, somewhere around there. And around this level here, we should see a bigger move higher. And then last but not least, oil and gas, XOP. Again, very nice move here, maybe potential 1, 2, 3. Maybe we're in a wave 4 here. So going to keep a close eye on this. We're bouncing between a 1618 and a 2618 Fibonacci extension from different moves, different high-low moves. But yeah, oil and gas is really, for me, where I'm going to be keeping my eyes peeled. But overall, this is what I'm looking at sector-wise. I'm not seeing too much relative strength. We saw a lot of oversold bounces on Friday, in Chinese names and tech names. But overall, if you look at the sectors, they still look really, really bad. So I'm really trying to focus here on where the relative strength has been over the last month or two. And that's pretty much what we reviewed. I think, again, it remains to be seen whether or not this is a counter trend rally or if this is really, if the bottom is in and now we head higher. So I think in the coming weeks we'll know. But let's just keep our eyes peeled. Let's keep our bias removed. And let's just trade the charts that are in front of us. So hope you've enjoyed this market review. As always, if you can, please like and subscribe to my channel if you enjoy this content. And leave a comment down below. Let me know what you think. Thanks for being with me. I look forward to speaking with you again soon. Take care.